Welcome to the Biz Bash podcast, where we make biz strategy a piece of cake. I'm Elizabeth.
And I'm Cami, but you might know us better as Eliza Ann Calligraphy and Cami Monet. We want to help you, our fellow stationers, artists, and calligraphers, confidently build a profitable and personality-driven creative biz.
We're here to share our honest-to-goodness advice and actionable strategies for ambitious artists.
So put on your party hat, quit being a procrastinator gator, and let's get this party started.
Hello, party people! Welcome back to another fantabulous episode of the Biz Birthday Bash podcast. It's your favorite host, Cami and Elizabeth, obviously. You guys, today's episode, I'm already sweating about it because it just makes me nervous. We're talking about creating a financial plan for your biz and basically figuring out how much money you actually need to make to be taking home the kind of profits you want, which is always stressful. And we'll be talking about different things like profit and loss statements and net revenue and cash flow management. And oh my gosh, I am literally sweating right now.
I kind of self-loathed myself for even putting this on the calendar. I was like, why did I pick this topic? And I was like, I don't know, maybe I just felt like we needed another serious biz episode. But I always kick myself whenever I suggest things like this.
Well, when you put this topic, I was like, oh, she must have some really good details to share on this because I know I don't. And then she was like, I don't either. I'm like, then what are we doing? But you know what, guys? That's the thing is when we make up these episodes, we just end up finding out things about actually taking the time to think about what we're doing. And then we're like, oh, we actually do have a plan or a strategy, or there's things that we can share that we didn't realize we could share. So, it makes us really dig deep. So thanks, Elizabeth, even though I am freaking out right now.
Yes, it does make us dig deep. And it's obviously with any episode, everything we say, just take it with a grain of salt, because a lot of times, especially when we're talking about numbers live, I'll listen back later and I'm like, that literally made 0 sense, on air, it's really easy to mess up or say something that's off or funky, or I've definitely listened to other episodes before from other podcasts where I'm like, I'm not sure that math was right. It just happens.
Every time we've ever said a formula out loud, we have said it wrong. So we will be putting any formulas in the show notes because we cannot.
As backup.
Yeah, as backup. So just look there because we're probably going to say them wrong. But yeah, this is just going to be kind of a general overview with some specific tidbits mixed in. And honestly, we'll just kind of see where the conversation takes us.
Yes, I agree. We do have some good notes, some things that really made us think, talking about how we personally manage our money, just so you guys have a little bit of introspection there. I think people like having the curtain pulled back a little bit. So we're just kind of going to be really honest about what money flow looks like for our businesses, or at least how we're kind of trying to manage it. So I don't know. I guess we can go ahead and start with what we have called the basics.
The basics, yes.
So the first basic is, how much money do you actually want to make? So you got to sit yourself down and ask this question. And it's kind of funny because I don't know if I've really even officially ever done this for myself before. I have had revenue goals and things like that, but I'm probably not really sitting myself down as often as I should to go over something like this. And then okay, so that's one of the first questions. The second question is, are you starting your creative biz to be your main income, or are you wanting some extra money on the side? Because that is really going to also change and shape the way that you are doing your business. The third one, do you plan on selling digital products or physical products? Because this will come into play big time for your profit margin. Or are you offering a digital service versus a physical service? Wedding invitations are kind of half and half. Starts off all digital, but then it results in a physical product. And then the last question is, how much time do you want to be spending on your business each week? Because for me personally, my ideal week is a 4-day work week. And that's what I've been pushing towards a lot. And I think especially here in 2021, I want to be pushing towards that even more while still maintaining the same or higher income. So these are some of the basic questions we should be asking ourselves.
Yeah, for sure. I mean, I feel I've always been this is my revenue goal for the year. And then like that's kind of the extent of it. I'm like, okay. And then I do this. I'm like, if I want to make that much money, this is how much I need to make per day. Like I make like a daily goal for myself. Like I'm like, I want to make $300,000 in revenue this year. So that is like, I think it's like $822 a day. And so that's my like daily goal. And that's literally my financial plan. So it goes real deep, you guys.
Right. And for some people, like I've definitely heard that strategy before where people are like, I just want to be making $100 a day, you know, and I'm going to start there and I'm going to go from there. But then once you dive a little deeper, then you start really understanding, okay, well, if I'm taking taxes out of this and I'm calculating expenses and all of these things, what do I personally end up with at the end of the day? And I think that's sometimes something that's like really easy for us to overlook or not think about as much. Or like Cami and I are also, I think, like sometimes fortunate in the way. I wonder if other business owners do this, Cami, where we're like, it feels good, you know?
Yeah.
It feels like I'm in a good spot. Like these numbers like feel good. So it must like be good, right?
And then you actually look at your numbers and you're like, wait a minute.
Right. Exactly. So I was kind of like giving a couple of examples, which I will talk through what I wrote down, but if it sounds like confusing or weird or crazy, because it totally might be, it will be written in the notes. But it's something for you guys to think about whether you want to make $5,000, you want to net $5,000 a year that you're taking home as income after taxes, after expenses, or you want to have $60,000 or $100,000. Like you need to be actually bringing in so much more in revenue. So this is kind of something actually like one of Cami and I's pet peeves too, is we'll hear people in the industry or just like people who are entrepreneurs in general who are like, oh, I made 6 figures last year, or I X, Y, and Z revenue goal. I made $1 million. And we use the word made. And I'm like, well, how much did you like take home that went into your bank account though? Because I think a lot of times when people say that, they mean revenue, but they don't necessarily mean like net income, if that makes sense.
Yeah. And I have this a little bit later in the episode, but we'll just go over it really quick. Like revenue is basically every dollar that you make into your business, like all of the dollars. And then your net income is basically what your profit is, like after all the expenses and all of that. So you could have like $1 million revenue and literally make $1,000 profit. So stuff to keep in mind.
Exactly.
I always get those mixed up. So I have to like remind myself.
If your revenue is $1 million and your expenses are $999,999, then you literally have $1. So
then you made $1, and that doesn't look so great now.
And 30% of that goes to taxes. Okay. So anyways, here's like some of the examples that I gave that like bear with me. I'm going to try to talk through kind of slowly. So like I feel like a lot of people are kind of in the range of like, okay, my day job was paying me anywhere from let's say 40 to 60 grand, right? So let's say you want to take home $60,000 and that's like net income after taxes. You need to be doing at least $90,000 in revenue because the self-employment tax will be around 30%. So it's like 30%-ish of 90,000 is 30,000. So 90,000 minus 30,000 is 60,000. Do we see how we kind of like got there? But we also need to be factoring in expenses. So let's just say like 50% of your revenue in this situation is going towards expenses, which honestly for like wedding invitations and stuff, sometimes I feel like it kind of falls around that area depending on like what your markup is. Well, in this specific situation, you would have to be doing like gross revenue of $180,000 because half of that, 50%, is going towards your expenses. So half of 180,000 is 90,000, and then you're left with 90,000 in net revenue. Once your tax is taken out, that like 30% or so, you're left with 60,000. So this is like what I am just like referring to as like reverse engineering, where you kind of need to like play with the numbers to be like, okay, I'm starting with like the number I want to take home that goes in my pocket. Because like if I want to take home 60 grand, I can't do 60 grand of revenue because my taxes and my expenses will eat into that 60 grand of revenue. I need to be doing like way, way higher in revenue. So when Cami and I were like strategizing and talking before this call, we were like, a good rule of thumb is probably like the 1/3 rule.
Yeah.
If you want to keep it like stupid simple. Because in this situation, like 60,000 is 1/3 of 180,000. That number I was kind of talking about once we broke down expenses and things like that. So it's like, if you want to take home 60,000 after taxes, after expenses, you probably need to be doing a revenue of 180,000. That's not always the case, right? Because if you have a way smaller expense margin, or your expenses are like way, way less, maybe they're only 25% of your revenue, maybe they're 10% of your revenue. That's like freaking amazing, because then you're going to be taking way home at the end of the day. But I was just like uber like conservative on this example and just like estimating that like half of your revenue could go towards expenses. Like, who knows? I don't know what you're doing.
We don't know what you're doing over there. We don't even know what we're doing. But yeah, 1/3 is basically the best general rule to follow, because I feel like a lot of people forget about those little things called taxes that really pick up at the end of the year and get turned into a big doozy. Yep. So you got to keep an eye out for that. So 1/3, because when I first started my business, I was like, oh, I'll make half of whatever. Like if I make 100,000, I'm going to make 50, but it's really actually like 1/3 instead of a half. So I definitely made that mistake when like trying to figure out what I wanted to make when I first started. But now I'm like, oh, okay, I'm making all this, but really you're making this. And honestly, you guys, when you start thinking about it like that too, if that's not an incentive to raise your prices, then I don't know what is, because some of y'all are like, I don't know, I'm scared to, charge $100 for this thing. Well, when you think about it, you're only making $33 from it. So now do you feel good about raising your prices? Like just a little tough love there for you guys. So if you really want to make, $100 on something, then charge $300 for it, Just a little thing.
Yes, absolutely. And I mean, I think that's something that's so important for stationers to understand too. Like sometimes you don't realize like how quickly those costs for ribbon, envelopes, paper, everything like eats into your invoice, So you need to be upcharging on that stuff to maintain a really good profit margin. I don't know, Cami, you said yours at one point was like, what was it? It was really good because you were upcharging kind of a lot.
Oh, I feel like my profit margin for invitations is always around like 85%. Like I kept it really, really high, which is also why shifting to a product-based business has been weird, because I'm used to my profit margin being like so high,
Yeah.
So I'm like, oh my gosh, I'm making so much more money, but like also it's like not that much more profit. Like it's still more, but I'm like, but there's so much more money. Like how can I cut back on the expenses? But that's just because the cost of goods is so much higher for a product-based business than like my invitation business. So I try to balance that out now by doing things that don't have like any expenses associated with them, like art licensing and things like that. So it just kind of like offsets the cost a little bit for things like that. But yeah, it was really nice to have that 85% profit margin. So yeah.
Yep, that was one of the things. Wait, I have to tell this story because it was so funny, because I think in general, like the wedding industry, we're all just feeling like this weird tension of trying to get back in the groove and just having a hard time kind of doing that. Because Cami, you said the other day, you were like, I entertained the idea of like taking on an invitation client, because you've kind of been phasing those out.
Yeah, because I was like, I'll take clients who are 10,000 or higher, who I feel like is a good fit. And I got the inquiry and I was like, okay, this is from Mother of the Bride. She's kind of, I don't love all the things she's put, like, I just know, you just get the vibe. I'm like, these are kind of red flags. They're not even like she didn't send anything bad. I'm just like, I can just tell that she's going to be kind of nitpicky. And then I sent out the proposal and I was like, that'll be a good little nice cushion for ordering product and like before the end of the year and stuff. Like literally that's how I'm thinking of it. Like, oh, you can fund buying all my new products.
Yep.
So then I sent her the proposal and she sent back like an email and submitting the proposal as well. So like double parts of questions. And I was just like, I literally cannot do this.
You're like, I'm out.
I know. I was like, the money. And then I emailed her and I was like, I'm so sorry, but my design calendar has just filled up. And then she was like, are you kidding me? I'm so disappointed. And then I felt like a total jerk. And then I referred her to Kelsey Kelly. So,
aw.
So you're welcome, Kelsey. But she is going to be a picky one, I can tell. But overall, nice lady. But I felt so bad.
Well, it was just like, it was almost like in that moment, even that really good profit margin, like wasn't like worth it for you, right? You're like,
Yeah.
I'd rather go with like a little less of a profit margin with my products, which are like nice and steady, and you've really been growing that side of your business. But you just have to be aware of how different that looks. And I mean, that's part of the reason for me that I've done such a big pivot too. Like I'm just doing way, way less invitations, as you guys can probably tell from my social media, because it's basically just like ridiculous reels of me now and like not pictures of invitations anymore. Gardening. My personal one is all like gardening. Yeah. But I have been shifting a lot towards basically like services for other entrepreneurs, like a lot of like my course building and like course management services, which have just like such low overhead for me. It's like ridiculous, you know?
Yeah.
So that's something that's like beautiful if you're doing anything in like the digital space, kind of, because you are going to have like online things that are overhead expenses. But that is kind of like a perfect segue into one of our next points. First of all, we're going to talk about listing your income sources, and then we're going to talk about calculating some of your fixed expenses.
Yeah. So like when it comes to you've decided like what you actually want to make and how much you actually need to bring in before you start crying about, oh, dang, I got to make like 3 times the amount of what I thought. This is a good time to start listing out your income sources and just understanding where the heck your money is actually coming from and seeing what areas could possibly grow without very much overhead expenses, or some places that you're actually putting in money and not seeing any profit from that. So listing out all your income sources. Where is your money coming from? Is it coming from Etsy, your website, art licensing, custom projects? Like, where are those things? And also thinking about the time as well. We can go and like get into all the weeds, but there's no reason to necessarily do that on this episode. But it just kind of gives you, that bird's eye view of where things are coming from. And we always do this at the end of the year with our like year in review episode. And it's always very eye-opening to be like, oh, wow, actually this much of my income came from this, why didn't I try to focus more on that? Like those types of things. So getting ahead of that earlier rather than later can be a great way to like start picking a direction for your business and really going down that path instead of just like throwing spaghetti at like 5 different walls.
Yeah. And I will say too, like when I look at my like overall income picture, I include like Eliza and Biz Birthday Bash under that umbrella, because that is like, I'm more concerned that like the two of them together reach me to my income goal rather than both of them having their own individual income goals. But I know, Cami, for you, it's like you have a very specific goal for Cami Monet.
Yeah.
And then like Biz Birthday Bash, I think you're just happy.
I don't even
whatever.
I literally don't even look at, like, I know we get like our paychecks and they go into mine and Alex's bank account. I have no idea what they are. So like that's fine. Yeah, because I'm always like looking at my own crap. I don't know. So yeah, my revenue goals are a little bit different there. But if I did this exercise, I would probably like look at that as like, oh, this is an income source, so I can use that for cash flow, which we'll talk about later. But yeah.
All the fun things. Yeah, it is really interesting seeing how it breaks down. And definitely go listen to some of those year in review episodes if you want to, because we talk about, like, Cami talks about the difference between like her Etsy and her website with her products. But then we also talk about any affiliate revenue that we have on the side. Or like for me, I still get ads from like my YouTube videos that I made way back in the day.
Yeah.
So there's all these like small little things that still continue to bring income that I'm not necessarily thinking about all the time.
Yeah. Like I was doing this and looking at things a little bit last month, and I was like, oh, shoot, I'm actually making like a pretty good amount of money from Casetify, which is like my phone cases on there that I literally never look at, never touch, like haven't updated. And I'm like, why don't I like take some time and add more phone case designs? Like it costs me nothing but time. So I can like really keep building that up. And that's like something that literally is basically, I mean, it's pretty much passive income for me. I do nothing and I get a check at the end of the month. I'm like, why am I not adding to that? I haven't updated it in like 3 years and it's still making good revenue. So, or profit,
that's
really.
amazing.
Like not only revenue, but just pure profit because there's no overhead. So
yeah, that's such a great point.
Yeah. So it's just like weird things like that where you kind of like forget, or, something that could kind of be working for you. Things like that.
Yeah, totally agree. I mean, that's one of my things that I'm kind of like trying to re-strategize and think about right now with my wax seals, right? So
Yeah.
you guys are getting like a little bit of a hint because I haven't like formally announced this in any sense, but I've been thinking for a long time about what would the process look like if I brought them in-house, because they've been on my Etsy account for 3 years and people continue to buy them and I don't do anything. I literally do nothing besides take that person's name and put it on the order sheet and like hope that the company that I partner with mails them out on time, you know?
Yeah.
So I was like, maybe I could have a little bit more control and bring them in-house and really like ramp that up. And like, will the expense for me be higher at first? Yes. Is it a risk I'm maybe willing to take to really like grow that part of my business? Also, yes. But my friend Nikisha said something good the other day. She's going to be on the podcast at some point. She was like, a lot of times when you try to control something, it controls you. And I was like, that is very wise. So
She is so
I guess
wise.
we'll see. I guess we will see how it goes. I was like, well, I'm going to do it. And if it falls apart or it totally dominates my time, you know, then maybe I change my mind and shift again. But I've been thinking about that for like more than a year now. It's like not like a knee-jerk reaction by any means.
No, you really have. It's definitely been something in the works for a long time.
Yep. All right. So moving on to the next point, calculating your fixed expenses. So just understanding what your overhead is. And I did this during like the first month of COVID, actually. And I think my sheet is still linked in our Facebook group somewhere. So anyone who's in the Facebook group can probably go back and find my like Google Excel sheet. But this includes anything from like your website costs, client management system, so Dipsado, a bookkeeper, a VA, Adobe subscriptions, internet, whatever it may be that's being like factored in as an expense in your business that is going to be charged basically every month. So that's like your guaranteed overhead. And I remember it was a huge relief actually when I calculated this during COVID when everything started shutting down, because I was like, oh, I still have a good enough surplus in my business banking account to continue to pay for the overhead expenses in my business without actually needing to bring in revenue right now. And so that gave me like, I don't know, that was just kind of like a sigh of relief, understanding the business budget, basically.
I know. And when I do mine, I'm like, oh my gosh, it just is so nice to have an online-based business because your overhead really is very, very low. You know, and I'm just like, oh, that is such a blessing in itself to just be like able to do things online. Whenever I'm like, I will get another space, then I'm like, oh my gosh, think of like that extra overhead. But then I'm like, because in my mind, I'm like, the overhead's so high already, but it's really not at all. So, I mean, even like adding on a VA and the bookkeeper, like honestly, that's the most of my overhead expenses. So, but very nice to have. So along with calculating those like fixed expenses that are going to be there every month or every year, you can like separate them out by month, like dividing, if you pay $100 a year, divide it out by the month. So, you know, depending on how you like to look at it. Some people like to look at things yearly, some monthly. I like to look at both. So also making note of any large like one-time spends coming up. Like if you're doing a huge notepad order or buying like a new $3,000 Glowforge or however much they are, you know, something like that. Like making note of those like really big expenses. It's not just like, oh, let me just order like 10 prints really quick. But making note of those big one-time spends.
Yeah, that's really smart because I'm going to be doing that with the wax seals potentially.
Yeah, exactly. Like noting that, like I'm going to spend like 20 grand on acrylic sticks this year. Like knowing that you're going to have those like really large fixed expenses just makes it a little easier when you have to like actually click the buy now button because you've already like anticipated them and like work those into your like financial plan. So it's just helpful to think of that.
Yeah, definitely. And I don't know if do we talk about like credit cards at any point during this?
No, we don't. We don't really know what we're doing. So we can talk about credit cards a little bit.
Well, because I think credit cards can be like a really, really valuable tool because you might not have, you know, for some people who are just starting up and starting out, I'm not encouraging you to get in debt, but if you have a plan for a product you're going to sell and you know that they sell well, but you need to do like a really big purchase, like what Cammie's talking about, maybe it's not $20,000, maybe it's like $3,000 to $5,000. That is a place where it's a really great idea to leverage a business credit card specifically in a wise way, if that makes sense, because then it's like you don't have to have that $5,000 sitting in the bank, but you know that you're going to pay it off immediately. You're not going to like let it sit there and accrue interest. So, I mean, I love my business credit card.
I do too, because I love racking up those travel points. Like it's like the best. So, and the card I have, remember I got the wrong one because I was trying to get the one. We both have Chase Ink cards, but there's like 3 different versions. And I was trying to get the one that got you extra points on office supplies, but instead I got the one that gives you extra points on shipping things, which honestly kind of worked out in my favor at this point. So thank you, Lord, for that. But so yeah, now it like gives me 3 times the points on shipping, which is one of the biggest expenses in my business.
Yes.
So it worked out pretty good. But yeah.
And my credit card, I think both of our credit cards and the Biz Birthday Bash credit card are set to auto pay, which is great because it's like, you know that that is going to be paid down every single month, and you know that you have the revenue in place. This is the thing too, is like you need to be like looking at your numbers and watching your numbers. Like, you know, you have the revenue in place to pay down that payment. But I've also heard stories from people who were like, I wanted to invest in a coaching program and I had nothing. And so I used a credit card to pay that $5,000. That then led to a huge kind of like that risk versus reward thing, right? That led to that huge payoff in the future because it was like the program that changed their life or whatever. Like, I have heard stories like that, but I am not encouraging like anybody to go in debt, if that makes sense. It's like, use the credit card as a tool, use it wisely within your business, get those points back, but don't be like spending outside what you're bringing in, because that leads to negative.
Exactly. And that's like my whole point when I go off on my tangent about cash flow and profit. Because it's
exciting.
Okay. Weird little metric that we kind of forget about, and you kind of know in your back of your mind, but you haven't like put the phrase to it yet. So we'll just kind of like, I don't know, more solidly talk about those things and define it a little bit. But first, I feel like we should take an ad break because I got to go pee.
All right. Sounds good. We are going to take a break real quick. We will be back right after this.
Everybody hold tight.
Hey guys, we just wanted to hop in and talk about one of our amazing resources, the A to Z directory. All of us have thought at some point, how did she do that, or how did she make that? And maybe you don't know where to start or how the heck to produce this amazing product you've dreamt up.
Well, the A to Z directory is the missing puzzle piece in your biz, you guys, seriously. So it's built in the form of a yearly membership, and it's your one-stop shop for finding suppliers and vendors for all the things. Literally where to print everything from custom invitations, greeting cards, mugs, koozies, acrylic printing, letterpress, custom ribbon. I mean, the list goes on and on and on. And it literally goes from A to Z. From acrylic printers to zipper pouches, we have it in the A to Z directory.
We want to help all of you search less and create more with this list of 300 plus vendors and suppliers. Don't worry, they're very organized. It's not going to be overwhelming and confusing when you join. And this membership also includes access to a private Facebook community. It's incredibly active and involved. And if you need a question answered fast, that is definitely the place to go.
Yeah, our Facebook group really is the best. You guys, everyone is so helpful in there. And we're in there too, answering questions you guys might have. So it's a great way to get access to us and ask us things without sliding into our DMs. So we're more likely to answer you in the Facebook group, just saying. Anyway, also in the Facebook group, this is new for 2020 and we're really excited about it. We are hosting monthly Power Hour Q&A sessions that are live, and these are only available to our A to Z directory members. So you can hop in with us live and ask us all your burning questions in real time and just hang out with us every month. And we do these at different times so you can actually be there live, and the replays are always available in the Facebook group for members.
This resource is priced at $147 a year, which honestly is extremely affordable and is full of so many benefits, such as exclusive vendor coupons for members only. And we would love to have you guys join. Seriously, it's kind of like our family and our tribe. So visit bizbirthdaybash.com/directory to sign up today and use coupon code podcast2020 to receive $20 off your first year. That's podcast, all caps, 2020 for $20 off your first year.
We can't wait to see you in the Facebook group.
All right, now that Cami is back, everyone, we are going to talk really quick about profit and loss statements, which is something that was kind of brought up at the beginning of the episode when Cami was throwing around some terminology and defining things for us. But let's take a second to dive into that real quick, and then we'll kind of talk about like the cash flow aspect of a business.
Yeah, so profit and loss statements, you should probably be looking at these monthly just so you're going to have it's just literally a nice bird's eye view of your business to see what's coming in, what's going out, your cost of goods, all that type of thing. It's just your way of keeping the temperature of your business, basically. So if you've never even heard of a profit and loss statement, you're going to want to start having some kind of business bookkeeping system. We've talked about this a bajillion times. We're going to hammer it home one more time. You have got to have a business account or something separate from your personal account and some sort of software that keeps up with those things. Okay, guys? Like you just got to do it. It's just like 101. You just cannot move forward with your life without it. So whether that's Wave, which is free, GoDaddy bookkeeping, which we both love, getting a bookkeeper. We love Kickstart accounting. That's who I use. And they're not that expensive, honestly. Or QuickBooks, all those types of things. You got to figure out one that works for you and actually use it. And within those systems, you'll be able to create a profit and loss statement or have a bookkeeper create one for you. And it just gives you that nice overview of everything. So you can be like, oh, shoot, I actually didn't make a profit this month. I'm making a loss. What happened here? And you can kind of strategize from there. So some of the quick terms, because I always forget these things, so I'm just going to go over them because some of y'all might forget them too. Revenue is literally every dollar that comes in. Gross profit is your total revenue, all the money that comes in minus the cost of goods sold. So anything that goes into the cost of making your profit is cost of goods sold. And then net profit is one step further after that. That is your gross profit minus expenses. So all your fixed expenses that we talked about. So normally this ends up being 50% of your revenue after you have cost of goods sold and the profit taxes. I'm sorry, 30%. What we talked about in the beginning, 30. Around 1/3. So
yeah,
those are just like
and it will be different for every business. So it's like, because let's say like the Amy Porterfields of the world that are doing like millions in revenue for online courses, like yes, they're paying for teams and stuff, but like overhead could be a lot lower. It's like much higher profit margin. So, maybe theirs looks different, but I would say especially for like product-based makers, like most of us we have some sort of like product or tangible good coming in through our space. Like I would say that the 30% is very fair. Or the 1/3 estimate is very fair. You'll take home 1/3 of your revenue
is definitely very fair. So the profit and loss statement just gives you like actual numbers to look at, and don't ignore them because they're scary, because they're just going to still be there. It doesn't change them if you ignore them.
Yeah. And if you guys are scared about numbers, go back and listen to our episode with Kickstart Accounting. I mean, that's literally why Cami started using them in the first place, is they like pitched themselves to be on the podcast.
Yeah, like it just seemed way less scary. Like I thought the bookkeeper is like, that could be a horror movie for me. Like I thought they were gonna like, I don't know. I thought they were going to be like, you're doing everything wrong. You are a fraud. Your business is a lie. I'm calling the IRS right now. And she was like, so I was embarrassed. Like I was afraid I was going to be doing something wrong. And she was like, honestly, everything is fine. Like I'm just going to like reconcile a few things. So I was like, okay, like I hate being told that I'm wrong. So like it was really scary because I was like, what have I been doing this wrong this whole time? Like, I don't know. I was just extra nervous. So she kind of like talked me off the ledge in the episode, and I was like, okay, it'll be all right.
Yeah, everything will be okay.
Everything will be okay.
Everything is gonna be all right.
That was free, you guys. You got to leave a review for that. So, oh yeah. Okay. So, anything else about profit and loss statements? Because I kind of just like glazed over that super fast.
No, I don't think so. I mean, it's really easy to like pull those reports and see what's going on, whether you're using QuickBooks Self-Employed or GoDaddy or Wave, Xero, all of the things. Like they should have a pretty quick way of doing that. And yeah, just look for a reports tab in whatever you're using. Just look for reports. It'll be in there.
Reports.
Reports.
Yes. Okay. So let's talk about cash flow versus profit, because this is something that I always paid attention to, but I didn't really understand what it was called. So now I kind of understand like the cash flow. Guys, I'm like already like stressed trying to figure out how to explain this in a way that people aren't going to be like, Tammy, that's the same darn thing. Because it's not, even though it sounds like it. So I have some specific examples. But this is really important if you actually want to be sustainable in your business, because without that money coming in, like that cash flow, not just the profit, but you're going to have a really hard time growing, because you can't live off credit card debt. You can't run your business off credit card debt. You have to have that cash flow.
Mm-hmm.
So here is the big difference, okay? So cash flow measures like how much money is available to your business at any given point. Kind of like how much money is in your bank account, like actual cash, okay? Actual money you have on hand. And profit is the amount of money that your products and services are bringing in. Does this make sense?
Say it one more time.
So cash flow measures like it's how much money you actually have. Like you have 10 grand in your bank account. That's your cash flow right now.
Mm-hmm.
Profit is the amount of money that your products and services are bringing in. Like I make a $5 profit off this product. Yeah.
Right. They do sound very similar. So I see why that could be confusing.
And it's really confusing for us. Like our industry definitely can have a cash flow issue, because think about how we get paid as stationers. Like someone makes their 50% retainer, and then you might not get paid that second half like 2 years later, sometimes, a year later. So you have that profit, but you don't have the cash on hand or cash flow. Does that make sense? So see how there can be
make it more sense.
Like a little bit of a struggle there, that you're like, I have a client, I'm making money, but like I don't have the cash on hand. Like what's the deal? So this is kind of like something to be aware of. So basically like the difference with those is time. Like how soon do you have that money on hand? Like how short or how long is your sales cycle?
Yes.
Because like with stationery, it could be up to a year for your sales cycle. So that is something to consider when trying to grow your business and having that cash on hand. So you can be like a very profitable business, but still not have like positive cash flow. And you're going to need both in order to grow. Like I mentioned, you might get paid a year later, but you have no cash. So here's like some specific examples to kind of like just talk about a little bit. So let's say
also, Cammie, you are sounding so smart right now.
Oh, really?
Like it sounds like, this, like I feel like I'm learning, like talking about like a sales cycle. I was like, oh my gosh, that's such a good point about like the sales cycle. I just want to encourage you, because I know you were nervous and you're doing great. So I can't wait.
I'm so glad you're
everyone
hyping me
to hear. I can't wait for everyone to hear all the examples. I'm ready. I'm learning. I'm here.
I'm like sweating because you're making me feel good. But I was just trying to put this in terms, because I'm like, oh my gosh, it sounds the same. And I never like understood the difference until like recently, because I have like these cash flow reports, and I was like, oh, I get it. Like it just all clicked. So anyway, let's say here's some examples of like not having good positive cash flow in your business.
Okay.
Like you pay upfront for a ton of product, but you're not selling them until December. So like I said, I just did this recently. I just paid $6,500 to buy acrylic sticks, and I'm not going to be selling them until December. Like I actually bought a credit from her. She kind of gave me a deal. Anyway.
Oh my gosh. Holy cow. Okay. Yeah. That's a big deal.
I know. So I'm like, I bought all that knowing I'm going to create those in like the winter. Okay. So that's like an example of like, if I didn't have good cash flow, I couldn't do that. Here's another example. This is where if you start growing really big, like, how some businesses just get like huge amounts of sales and they grow, but they can't like sustain it. This is why. Yeah. Let's say you had like major growth in wholesale orders, which typically get paid net 30 or net 60, which means 30 days later, 60 days later. You had major growth. You got 200 wholesale orders, but you don't have the cash on hand to actually produce them. And maybe you can't even like put that limit on your credit card because it's so much money. So you theoretically grew your business, but you don't have the cash to produce it because you don't have any cash flow coming in.
Yeah. So, okay. I feel like I remember hearing something like this from when someone had gone to NSS.
I think it was Meg. It was Meg from Bell & Union. She was like, I got all these orders, but I didn't have the cash to actually make it.
Did she tell us that on the podcast with us?
Okay. Yeah, she did. So perfect example, Meg from Bell & Union. She went to this national stationery show, got a ton of orders, and then she was like, oh, I actually have to spend like $20,000 to even make these orders. Like, I don't have that.
Yeah. And you don't. Okay. Yes. Because so going back to that net 30, net 60, you do not get paid for them until the product is delivered.
Right.
Like sometimes after the product is delivered.
Yeah, exactly. So just thinking about things like that, and I talked about another example, like you get paid the retainer for invitations, but you don't get that second half of the payment a year later, but you still have bills to pay. So like, let's even dive further in this example. Let's say you get paid $3,000 on a $6,000 job. But over the next 6 months, because that's how long your sales cycle is in this example, your operating expenses are $4,000, and you also have to pay for the cost of the job. So let's say it's $500. So even though you're profitable in the project, you don't have cash flow coming in to support those bills or invest in new things for your business, like a printer or paying for a booth at a wedding show to get more clients. So it's difficult to get out of that cycle if you don't have positive cash flow.
Yes. I like to casually refer to this as the roller coaster. So that's like what I've been saying to Will. And so I wasn't realizing it until now. It's kind of clicking. What I really mean is like cash flow. I'm like, yeah, no, it's just like roller coaster cycle of my biz. Like sometimes there's a whole lot of it at once. And then like sometimes there's not a lot of it at once.
Honestly, we should have just done the whole episode on this because I feel like everyone experiences this, but we never really knew what it was. And like, I'm just now realizing all this as well. So
yes, no, this is great. This all goes together with like the overall kind of like financial planning aspect of things. So no, I like that it's all together.
Yeah, because especially with like both of our businesses, like type of like a product or a maker where you're doing wholesale things or stuff like that, or there's like slow seasons, like all these things lead into cash flow problems as well as stationery. So it's just like, this is a huge thing in our space. So let's talk about it some more. So here's another example of like a business decision that can seem really great, but can get you into cash flow issues. Like, let's say you only use white envelopes in your stationery. So you're like, I'm going to go ahead and buy 10,000 envelopes up front because I know I will use those and it's cheaper per piece at this like tier or whatever. But now you have invested a ton of money up front into something you don't know if you have the sales necessarily to back it up yet. And now you might not have any more cash flow for the next time your client's like, actually, I want black ones. And you're like, well, I spent all my money on white ones. So now I don't have the cash flow.
Right.
So it's like fine to make those decisions and spend big dollars, but don't do it to the point where you're like, it's saving me money in the long run. And you don't have like steady cash coming in. Like if you're only working with one client a month, but you don't have like some kind of secondary income where it's like you can keep having cash flow coming in, it might not be best to, buy the 10,000 envelopes. It might be better to do it per project so you can keep that cash flow in your business, because you also have to account for like contingency plans. Like 2020 is a huge example of accounting for a contingency plan. Like if you didn't have that cash flow, like a lot of us didn't have those clients, they postponed, and you're like, well, I'm not going to get paid for literally like another year and a half. So that cash flow is completely gone for this point. So just like figuring out how to plan for that. And so buying those 10,000 envelopes in 2020 wouldn't have been awesome.
Yeah. And that, I want to say too, that is something that's really important to think about, especially if you're entertaining the idea of a semi-custom collection that offers very specific like types of, let's say, handmade paper or handmade envelopes. Like I've had discussions with friends before about what it looks like to like try to stock some of that stuff. And it's really difficult because that's like a really high upfront investment, but they have to keep some of it in-house to like meet the demand of like the orders,
Yeah.
But yeah, kind of like a fine line to walk. It's a lot easier sometimes with semi-custom when you're going to take it and submit it, say, for print at one of like the companies that it feels like everyone in the industry uses, like with their typical paper stocks. But if you're wanting to do like a fine art semi-custom collection suite, I know that is something that can get really tricky.
Yeah. So this is just one of those metrics that just trips people up. So you're like, you have clients coming in, but you're not getting paid. So you don't really have that money in your bank account to spend it. And like without that money to spend, you really cannot grow your business. I mean, I've just realized this more and more. You have to spend money to make money. And if you're running into cash flow issues, it's going to be hard to grow. You're going to be basically either, spinning your wheels, staying in the same path, or, chipping away at getting into the negatives.
Yeah.
So let's talk about how to not have cash flow issues, how to increase cash flow, you guys. This isn't necessarily about increasing profit. It's just about increasing that cash flow so your business feels like nice and healthy, and it's not just like a dried up river, like waiting for the dam to break every month or whatever. So spreading out large purchases so you have time to heal or recover. So like anytime I make a large purchase, I don't want to do like 5 in a row because that would be, really difficult. I want to like actually have the cash on hand and feel good about it, or like, no, okay, I won't have the cash today, but I'll have it tomorrow. Like that's enough of a short sales cycle or spend cycle for it to be okay. Or, next week or something like that.
Oh, can I say something really quick about that point too?
Yeah, for sure.
Because like I don't necessarily do huge product purchases, like for acrylic sticks or whatever it may be that you're buying, a bazillion of, Cami. But I like to really evaluate at the end of each year is kind of when I do my biggest purchases. So like buying my new laptop, I bought, I think in December 2019, buying my Glowforge, I bought in December 2020, because then it's like really easy to see the full scope of your finances for the year. So for me personally, that's like when I always feel most comfortable doing those types of purchases, because I'm like, okay, I know I had like the cash flow to like meet this requirement end of year, because I can see the whole, year laid out of my bookkeeping. And also it gives me the chance to like business expense a big thing at the end of the year to bring down my tax like liability, basically.
Yeah. Yeah, exactly. And then like we talked about the envelopes, inventory management, like you don't want to just buy tons and tons of product to have it sitting on your shelves, because now your cash is literally sitting on your shelves, like, and
yes,
that can be problematic. Staying on top of invoices. So making sure you're getting paid. And I was even thinking about this, like maybe even sometimes offering an early payment incentive could be a great option if you're like, I need cash flow. Like maybe you could be like, hey, I'm offering like free addressing if you pay your invoice 6 months early or something. Like just something if you're like, I need cash flow right now. My invoice is not going to be paid for another year. Like what are some ways you can kind of get your clients to pay faster if you need something like that? So
I have a question, Cami, for like the wholesale world. I don't know if you know this, but why is it that they get to do like net 30, net 60?
I don't
like
know.
why do is it because it's always been that way for forever? Like why don't retail companies like have to pay for their goods like upfront when they order them,
I don't know. I always thought it was really stupid. And like if a company orders directly through me, I don't do net 30 or net 60 unless it's like an account that I know personally and they like have worked with me a lot and they order a lot. Like I will still do that, but if they order from me or like a first time account, but most of the time my orders are coming through, Fair or Abound. So it's like they're going to have those payouts regardless. And you can choose on Fair if you want to do like next day payout, but the commission is higher, or the 30-day payout, but they don't charge the company. It's still net 30. But I don't know why it's like that. I always thought that was really weird too. So I don't know why it's like that for wholesale.
Yeah, it's super bizarre. Maybe I'll do a little bit of research on that, because I bet it goes back like way, way, way back, like way farther back than we realize.
I feel like it's going to change, especially after the paper source thing.
Thank you. Oh my gosh. I was literally about to say that, like, especially after that, where people were like, this is not okay for you to order. And I put order in quotes because that's what it feels like to me, right? When you're like requesting product from people, but being like, I'm not going to pay you another 2 months. So it's like they bust their butts to get all this product out. And then it was like paper source declared bankruptcy. And there were all these open invoices that they like never settled, basically. So
I don't know why that is. It drives me crazy. I agree. I think it's really dumb. So
yeah, I do not like it. I will do some research. Yeah.
Maybe it's so that the retailer can buy it and then theoretically they sell it and then have the money to pay it back. But I'm like, but then the maker is just in this awful position. I don't know. So why do we get the short end of the stick?
Right.
Yeah, it's very weird. So, okay, more about how to increase cash flow. Maybe that looks like having a sale to get cash flow coming in before you invest in purchase for your biz. Like I do this all the time. I'm like, 20% off notepads, because I'm like, I'm about to spend some money. Like, let's get some cash flow coming in to make it like feel a little bit, even though like I'm making less profit on that product, I'm getting some cash flow coming in. So it's just like another way I like to just keep things flowing, guys. That's just like the whole secret here.
Yeah.
Looking for additional revenue streams, like I mentioned before, like Casetify for me is really good. Like I need to keep that moving. Like maybe there's something like affiliate revenue you could keep up to have just like a little bit more cash flow coming in. And then the last one, which I think is a really big one, not getting caught off guard for seasonal revenue dips. Like looking at last year's trends. Like I feel like March and April are always kind of slow. I feel like January is kind of slow, although January this year for me was really good. So it kind of I don't know. So I kind of was like, everything's great because January is usually slow and now it's really great. And then it wasn't that great in March and April. So I'm like, what the
Right.
heck? So looking at last year's trends for like revenue dips, just kind of like be aware of it and being like, maybe you're not going to, buy something new this month, like your Glowforge or whatever. Like just being aware of when the dips are, those types of things. So when you have that positive cash flow, you are stable enough to spend. So you have that buying power. So if they're like, let's say one of your printers is like, hey, I want to offer you this deal and you can save this much money and then you can go ahead and buy it. Like, because you have that cash flow available rather than be like, I can't make it work. You have like more flexibility to do those things. You also have debt protection because like I mentioned before, when you are constantly have like a really long sales cycle, but your bills are still there on a shorter cycle, then that just kind of like chips away really slowly at your profit and your debt protection. So
yeah,
having that is helpful. And then, like I mentioned as well, when you have no money to spend, it's really hard to grow. So having positive cash flow has helped me take advantage of sales and supplies and invest in new products. And that's my tangent on cash flow.
Yeah, no, that's awesome. That's just super helpful, I think, for people to get a better idea of what that means and how it works and what it looks like. And so, Cami, do you feel like your business has been able to maintain good cash flow for products because of like the diversity of your products?
Yeah, I definitely think so. Because if one thing isn't selling, then at least another category might be. Like weirdly enough, like it'll be like 1 week it'll be prints are doing really well, and recently this week I've noticed acrylic sticks have just like skyrocketed. I don't know what happened, but like people are buying them like crazy. So I'm like, that's great. So yeah, having having the product diversity is almost like having multiple streams of revenue because you can find someone who's interested in something in your business in all these different ways that you're catching their eye. That makes sense.
Yes, for sure. Like, I feel like that will be one of the tougher things for me with the wax seals because I plan on staying just very niche, I want to offer my wax seals. I don't want to offer like a million other things too. I mean, I think that's why ultimately at the end of the day for me, I was like, Thank You Society isn't the right fit because I don't want a full blown like product line. I just want to keep like my Eliza Ann wax seals and just like be happy with one very specific thing. But also I think I can really hone in on that, and that can be very powerful in its own way of like really being known for one specific thing. So it's not necessarily like bad.
No, definitely not. I mean, there's like so many ways to look at everything. That's why it's like sometimes it's so hard to give business advice because it's like, well, if you have a lot of things, it's great. But also if you just have one thing and niche down, it's also really great. So it's like, it's all great. And you're like, well, what do I do? And I'm like, just figure it out.
Just figure it out. No, I remember when I spent all of the money up front to order my like 2020 ornaments. Those were like some really big purchases, probably like the most expensive, the most money I had spent on product before. And it was kind of me just like crossing my fingers and hope that they sold. And they sold so freaking well that it was like they were sold out and I didn't even really have time to make more before Christmas.
Yeah. See, there you go. And if you didn't have like good cash flow, you couldn't have done it. So, because you ordered them in like August. So that's like, early ordering and all that jazz.
Yep.
So I don't know how helpful this was, you guys, but I mean, it was some semblance of a financial plan a little bit. Like it gave you something to work with.
I think so. I mean, like, okay, so the funny thing is I was like, of course, Googling like making a financial plan for your business, like the more like official routes to take.
Oh yeah. And they're all like really intense.
Well, like not even necessarily like intense. Like I feel like sometimes they're actually like really vague. It's like, here's like the number you want to hit. Here's like my marketing plan and ideas. Like so it felt more like business planning to me than necessarily like a financial plan. But this episode is called How to Create a Financial Plan for Your Biz and Manage Your Money Well. So like I feel like we kind of like talked about that a little bit. And I will say like final note too, while we're kind of wrapping up, like people have always had questions about like how we pay ourselves and what that looks like. Cammy's is kind of like willy-nilly. There's been like different episodes where we've talked about this and she's like, I'll just like, pay myself when I feel like I should pay myself. And I literally do it biweekly on paydays. And so it's like I have a whole lot of cash flow like at once when like a client of mine opens enrollment for their course, right? And I like get payment from that. And then that money sits in my business bank account and I am like doling it out over a long period of time. I don't like immediately pay all of that into my personal account, you know?
Yeah.
I'm like keeping it in my business account if I want to use that money for stuff in my business. And then it's like every bi-weekly, I'm allotting like a certain amount that's like my paycheck or whatever. And I move that to I transfer it to my personal bank account because I have my business bank account and my personal bank account. Biz Birthday Bash has its own bank account. So there's all these kind of like little buckets. So I feel like sometimes like good business finance is also comes from the foundations of having like good personal finance, right? And the way that you move your money around between like your checking or savings account is kind of like the same way that you might consider moving money around in your business or how you pay yourself or things like that. So I don't know, maybe we need someone on to like talk about like personal finance at once. I've always really loved oh gosh, there's like this blueprint that she does. Why can I not think of who it is?
Jana Skidmore?
Yes. Yeah. Maybe we need to like pitch her and just have her come on and talk personal finance. That would be awesome. Because I think she's starting to like pick up some things again. And I've like learned some good things from some webinars and stuff she's done. So
yeah, that would be good because I do not feel like an expert on this by any stretch of the imagination. So
yeah.
Oh, well.
One day at a time.
One day at a time. I mean, really, the key is the 1/3 rule. You're probably going to make 1/3 of what you make. Have some sort of business bookkeeping system in place. You know, be aware of your cash flow and your profit margins, and then always make more than what you spend. The end.
The end. Use credit cards wisely, not just to rack up like debt.
Yes, and I think that's it. Hopefully.
That is it. So if you guys are loving the Biz Birthday Bash podcast, which we really hope you are, please head over to iTunes and leave us a rating and review. We absolutely love when we hear from you guys. It means the world to us. For a while there, we were like reading them on the podcast. And then, I don't know, I think like COVID happened and we stopped.
Yeah, I don't know what happened. But guys, leave a review. We'll start reading them again.
Yes, please leave us one. And then if you have any questions for us, feel free to drop those at bizbirthdaybash.com/Q and cake, or you can just go to our main website and scroll to the bottom. There's a little Q and cake option in the footer, and you can fill out our little form there to ask us a question. Ask us about business, ask us about our personal life, ask me about my garden, ask Cami about her roof and Fig Newton. I don't care. You can ask us whatever.
Oh, I got stories about my roof, y'all, if you ever want to hear them. I won't bore anyone, but listen, I sued somebody and won, and I'm very excited about it. So isn't that exciting? I've always wanted to sue somebody.
Wow, that makes you sound like a crazy person, but it's mainly that you like sued the insurance company, right?
Yeah, basically. But
yes.
It was so fun. Oh my gosh, that was just the best. I hope I never have to do it again, though. Oh.
Yes, Cami was not suing, just to clarify, anyone in the industry or any single person. It was the company because they wouldn't like pay for the roof repairs. So
I like how you had to clarify that. Like someone's
I did have to clarify it because you were like, I sued someone and I won. And I was like, oh my gosh, it makes you sound so crazy.
I am crazy. Oh my gosh. Anyway, you guys, on that note, we love you. I'll see you later. Don't cross me. I might sue ya. All right. Bye now.
Bye.
Hey guys, you know we share a ton of free, helpful info here on the podcast, but if you're looking to go deeper, you need our Business Sense for Creatives bundle. This is our foundational resource where we share it all. Our pricing strategies, marketing plans, our favorite print partners, real-life examples of our invoices and workflows, and so much more. Literally, it is amazing. It really is the comprehensive guide for a money-making creative biz.
So with the bundle, you'll get access to our 3 webinar replays, Pricing with Purpose, How to Be Confident When It Comes to Charging Your Worth, People and Publicity, How to Find Clients and Deliver an Awesome Experience, and lastly, Productivity and Processes, How to Run Your Business Efficiently and Get Crap Done.
And not to mention, you'll also get our 3 bonus PDF party favors. What? We've heard from students that these are worth the price of it alone. So the party favors are pricing FAQs, the SEO cheat sheet, and a mini favorite vendors guide to get you started on where to print invitations.
So just to clarify, that is not only 3 awesome video recordings, but 3 bonus PDFs as well that support the content from the videos. So I think it's a pretty good deal.
Totally. It's the best deal out there. And you have lifetime access to it, which also adds to the whole value. So,
woohoo! Don't take it from us, though. Take it from the hundreds of students who have learned from the bundle and have said that these were the best, most real, and informative webinars that they've ever watched. We've seen students double their prices after watching these and totally skyrocket their businesses.
this is our roadmap of how we got to where we are today, so skip the mistakes and speed bumps, doing it the slow way, and let us put you on the fast track to running a creative biz like a boss and pricing for profit and not just pay.
And the best part, this resource is less than $100. Seriously, y'all, it's only $97 and it's so worth that price and much more. So go to bizbirthdaybash.com/bundle to purchase it today.